Well, good morning, everyone. I don't know how this happened, but we're at Friday again, so it's good to be here and a weekend ahead. It's been a busy week in the grain markets. I always think on Friday it's good to reflect on the price changes from week to week. With the modified close here right today or before this taping, we're down 9 cents on corn. We're down 30 cents on beans. We're down 10 cents in KC wheat, down 9 cents in Chicago wheat. So it's been another down week per se, and it's a little bit surprising on some of the weakness because in the corn market in the last 3 weeks, we've seen funds actually covering short positions. We also had some sales this morning. They weren't to China. We, of course, saw yesterday that that was incorrect and they went to South Korea. This morning, we have 102,000 tons of corn sold to Mexico, 140,000 tons sold to South Korea. USDA got it right today, and 142,500 soybeans to Mexico. The Mexicans are kind of ramping up their purchases. Again, as I mentioned yesterday, I think for Mexico, as we head into a USMCA renegotiation on October, they want to keep their silos full. So I would imagine the Mexicans are going to be one of the predominant buyers here looking forward. So as we think about the week, it's a lower week. We'll see what the overall trends are here today, but we were weaker in Friday trade heading into the modified break. We're down about 2 on corn, down 4 on wheat, down 6 or 7 on beans, and that kind of starts us to where you should take over, Ben. What do you think here going forward, and what's your thought process for the next week or heading into the weekend?
Yeah, I think so. And why is the market acting like it is? And again, we've reiterated over and over again, this is not uncommon for the latter part of July. You don't have a glaring threat to supply. This is typically what happens. And we've thrown a lot of weather graphics at you guys viewing this, and it's given kind of the same, I've realized, over the last 2 months. And so I think part of the story this week is just kind of abundant rainfall again. Even overnight, we've got 5 to 6 tenths in northeast Illinois, and half an inch pretty widespread across parts of Iowa, and 1 to 3 inches in northwest Missouri, which last Friday, if you remember, that was a place we were pretty concerned about, indefinite heat, dryness, and that proved to be a bust, that forecast. So it's just raining in a lot of places where it needs to rain, especially kind of Kansas, Missouri this week. So what you see here is from Sunday to midnight last night, and just kind of tough to identify a water problem in the Midwest as we get into August. And so if you have pretty decent weather for another 30 days, that's becomes kind of a unique growing season. And so you've got to entertain, trends or yields well above trend as we get into the August and September crop reports. And then this forecast too, the 10-day forecast, again, these have looked almost identical every day for the last 60 days almost. So we've got a pretty wet forecast in the eastern Midwest this weekend, and then in the 6 to 10-day period, rain kind of expands, goes back into Kansas, Nebraska, South Dakota. So again, trying to find a place in the principal corn belt where water is not abundant. That's, I think, what's difficult to do today, and that's why I think explains why this is dominating and kind of offsetting what you're seeing. Daily export sales, pretty decent corn export demand, and just the balance sheets may need that export demand if yields are as high as some people think, or we do test the genetic potential of corn. And just kind of lastly, weather-wise, these have been very consistent. We kind of got wind of this over the weekend, but it is going to be kind of a hot, muggy weekend in the eastern Midwest. But we're together all going to make it through this. July 29th is the cutoff date. We've got pretty mild temperatures thereafter. Now into about August 8th, that's where the forecast extends to. So thinking about, after August 2nd or so, overnight lows in the 60s, it's going to be pretty nice for spring row crops. And again, that's, I think, what's dominating prices. The one story we have been able to point to the last 10 days or so is the Russian wheat cash market, and it's kind of a fact that it has gone from 225 in June to 242 per ton currently, but we're starting to hear rumblings that the short squeeze may be in its sort of last stages. I think the quantity of wheat being offered from Russian exporters for 12.5 protein wheat is increasing. We're hearing of some lower trades, overnight even. This has been kind of meteoric, and so I don't know if it's sustainable. And in fact, I think we might see a change in the Russian wheat market over the next 10 days, 2 weeks. And at Resource, I know we're hyper-focused on U.S. weather, but we've always, the last 2 decades, kind of focused on world markets first and working back into the U.S. So I think this is important and explains why the wheat market, like corn, despite pretty decent export demand, is kind of unwilling to add premium, because we can see this, kind of probably really large Russian export program still coming at us between August and November or December. I think part of the story in the wheat market globally and Russia specifically, it probably comes down to just too much rainfall as they're trying to get this crop in the bed. So on the left, you've got July 10th to the 25th, percent of normal rainfall. And I've highlighted what is about 90% of Black Sea winter wheat production. So you can see in the northern two-thirds of this belt, we've seen 1 to 3, upwards of 8 inches of rain in some places, well above normal. So you just can't really get the crops in the bins. And that's been, I think, the story and why exporters who have booked sales have had to scramble to get whatever they could into position. But thinking about that, I think taking this trip into the Black Sea, you can kind of see that 7-day forecast on the right, rain, the spigot kind of shuts off. So there should be a lot more harvest activity. I think that the sort of flow of grain in Ukraine and Russia will be improving. So again, that's why we're kind of cautious. I think our long-term thesis in wheat is still one of, competition for demand. And that, I think, spreads into soybeans and corn as well. So I don't think that changes now that we're probably going to get more wheat from Russia into position to export. So you can also see here that, western parts of northern Ukraine, kind of abundant rain. It's where a lot of corn is grown. So the Black Sea forecast also not giving us a reason to add supply or risk premium. So we are concerned the Russian market maybe starts to turn over in the next couple of weeks. And then, just thinking about why, we sold a lot of corn for new crop even, it's at a multi-year high, and the old crop number from USDA still may be revised upwards by 25 million bushels. Why is the market reacting to any of this? And so these are not official numbers. We just wanted to present some scenarios and show you why I think that is the case. And really, I think the story centers on just having planted 95 million acres. This is also colliding with really good weather, yields of 184 or higher. So if you see on the far right, let us assume that exports are something like 2.7 billion bushels. You're still left with 1.9. Or if yields 185, you still have 2.0, 2.1 billion bushels of in stock. So the balance sheet can afford this export demand and probably needs it. And so we still have the question if Brazil's got a record crop, can you get exports much above 2.3, 2.4, 2.5? Maybe it's difficult. So I think that just puts into context why the market's been kind of unimpressed or unfazed by even the decently sized new crop export demand we've seen. It doesn't prevent oversupply at harvest. So that was a long-winded way of saying still that's the message I think in the marketplace as we get into early August, which seasonally is not a very bullish time of year. It's just, is there anything that the trade can wake up to in any given day and say, yeah, there's a threat to oversupply? And I guess we haven't been able to identify that just yet.
Well, there's always trade deals, Ben, but I keep thinking about, if the U.S. corn yield is only 2%, because we're these higher numbers, it's a 185 yield on corn. If we're 4%, which is not unusual in these good growing years, it's 189. And so, when we think about a 184 to 190 bushel per acre yield range on corn, I think that makes sense. We'll refine that yield range on beans going forward, but those are the key ingredients in the market. I want to wish everybody a very good weekend. You can always take a trial of our research here for $1 by scanning that QR code to the right. We are wishing you all a restful weekend. We'll be back next week and see if the grind can continue in the grain markets. Have a good weekend, everybody.